Well, good evening. Good evening. My name is Rod Casilli. I'm the lead derivatives and futures trader here at VPT Live. If this is the first time you're seeing this, what I'm going to do tonight is something a little different. I've done this in the past. It's kind of a longer form broadcast here. You can think of it as a webinar, so it is being recorded. It's also being recorded live. So if you're commenting in the chat, I don't even have the page open, so I won't be able to answer anything in the chat. I'll be hanging out in this little corner down here. You can see my face while we go through these slides. If you want to get in touch with me or you find this of any interest now or at the end, you can shoot an email over to rod@virtualproptrader. That's all one word, rod@virtualproptrader. And also, I don't give a shout out for this too often, but some of my colleagues on the desk say I should more often. If you like the content, or if you don't, or whatever, put comments, like, share, get social with it. Facebook, LinkedIn, here on Ticker TV, on YouTube, wherever you might be watching. I'd really appreciate it if you send it out there. Thumbs up or thumbs down. All right. So let's get started. The way I usually do this is I let the slides kind of be my guide, for better or for worse. I don't have any speaker notes. I have a couple things I'll look at the other screen up here. I wanted to maybe make this more controversial and title it something like, you know, all you stock jockeys out there, you don't get it, or all you penny stock guys with your watch lists and scanners and your aerial views of your cars. But I decided not to be, too much of a jerk about it. But sometimes controversies, I figure I got to get a drone, man. If I'm going to compete in this crazy world of trading education, I got to get a drone and I got to fly it over my Porsche and show my house and stuff like that. It seems like that's the way things work in the stock world. Anyhow, I decided against all that, and what we're just going to call it is the 10 reasons me, strongly prefer trading futures. Before we get going, I do have to throw up our disclaimer, because this actually absolutely is for educational purposes. It's not a solicitation in any way to buy or sell any stock or security or futures, although hopefully at the end of this, if you're not currently involved in the future market and you are actively trading, or an independent investor, or a self-directed investor, or a prudent speculator, or someone who's interested in the markets, you might take the time to learn a little bit more about the futures markets. But this broadcast in and of itself is for educational purposes. Nothing is meant as a solicitation to buy or sell any stock or security. You can go to vptlive.com/notices for more information about our risk disclosures and disclaimers. And did want to remind everybody that trading, especially in these types of instruments, is extremely risky, and it's not suitable for all investors. You know, it's risky to cross the street as well if you don't look both ways. All right, let's pop that off of there. My goal is to keep this under 15 minutes. I know the shorter content tends to be more digestible, so I'll move through it relatively quickly. Again, so the 10 reasons that I strongly prefer trading futures. Last comment on this particular slide, I'm really not going to get into exactly what a futures contract is. I don't think it's important for the context of understanding this. I'll just let you know that in and of itself, a futures contract is a derivative of an underlying, like something like gold or oil or a stock index future, and it's traded in various different increments, typically called or usually called contracts, and it's just a great trading vehicle, and that's what we're going to get into and take a look at tonight. All right, let's go over here. Reason number one, as soon as I figure out how to move it. Reason number one, that's checkerboard, simplification. So in my world, futures is kind of like checkers in terms of its simplification, and the stock world, and by the way, don't get me wrong, and I might go off on some tangents here, I love stocks, and I started my career at Merrill Lynch, and I invest actively in stocks, but I tend to invest in stocks and trade derivative products like equity options and futures, and there's a reason for that, which I'll get into as we go through the presentation in a little bit more detail. I love investing in stocks. I think they're perfect because with stocks, they're really about futures earnings, and you are making an investment in the future management and growth earnings of that company. Whereas what we're going to look at tonight with futures, if you get invested in a futures contract, it's very difficult unless you're really passionate about lean hogs or about interest rates. So simplification, reason number one, and this is probably also what I call my lazy clause, which is it's a lot less work to trade one or two or just one futures contract every day. And again, your mileage may vary. I don't know you. I don't know your goals, what you're trying to do in terms of honing your trading skills or what's happening with you in any way, shape, or form, other than I do know that this particular channel where I'm recording this, and you could be watching it on our blog or YouTube or somewhere else, is a place for active traders, and there's a lot of people that are very interested in how they can make money in the markets. And the first question is often asked, what vehicle should I trade? There's typically four things. There's stocks, options, futures, and forex. By the way, as a quick side note, a lot of what I'm going to go through tonight, the benefits of futures, yes, you Forex traders, you foreign currency traders, whether you're trading spot Forex uh, um, or crosses, a lot of this applies there too, but I won't go into all the reasons I dislike Forex, and I think there's some benefits to futures versus Forex. It's just why I dig futures. So, but a lot of the benefits that you're going to see here, yes, it does apply to the Forex world as well. So, the first decision you're going to make if you're going to try to day trade or swing trade or become a self-directed investor or trader and look to create alpha and beat the markets with producing edge and following some system is, what do I first trade? And those are typically the four that you can trade. And with futures, it's just darn simple. I happen to trade three main contracts. I trade the S&P 500 contract, I trade the NASDAQ contract, and occasionally I'll trade crude oil or the Dow Jones Industrial. So that's all I got to worry about. So I don't have a watch list. I don't have a scanner. I don't have to figure out the pace and speed of a particular instrument. Now, I appreciate and understand that a pattern is a pattern, and I also get it that you can come in and run your scan and look for your stocks that are moving, and you know, levels are levels. But look, instruments have their own kind of pace and rhythm and speed. And just as I think that some of the best stock traders focus in on just a few stocks, I think one of the detriments of a lot of day trading stock stuff is that their watch list and what they trade every day is different. It just doesn't work for me. I can't do that. I can't deal with scanners and following different things. I have to be very familiar with it. So for me, it's about simplification. You might have heard that trading is simple, but it's not easy. I think that one of the simplest ways to make it not easy is to be looking at different stocks and different stock symbols and different prices and things every day. Just not something I can do. Reason number one why I prefer the futures markets. Number two is time. Time is on my side. I was the lead singer of Throb, 1987, heavy metal rock band. All right, stock index futures. Well, they're basically open about 23 hours and 15 minutes a day, with the exception of the weekends. And although I don't choose to trade during a lot of those times, there's a benefit to that. I mean, not everyone's going to be able to trade during the stock market normal hours. You could be all over the world at different times, different markets that you're trading. But the futures markets, most that are traded on the U.S. exchange, where I trade CBOT and ICE and CME and those kinds of exchanges, are open about 23 hours a day. So, you know, more opportunity, more time. I dig that. Next is amplification. Now, what do I mean by amplification? So, what I'm getting at here, in the benefit that I find for my trading, is that these markets are relentless in terms of reinforcing good behavior and making sure that you have edge and punishing the sloppy. Now, don't get me wrong, trading, although simple, it's not easy. You can get crushed and really hurt if you don't put in the screen time, have the passion, have the commitment, develop a style, trade an instrument that works for you. There are plenty of ways to go sideways in the markets. But the futures markets themselves tend to amplify all that. We'll talk more about the leverage. And again, there's leverage in a lot of different types of instruments. So if you move a stop, you're going to get punished. If you trade too big, you are going to get punished. I find that many other instruments, especially Forex, where you can get in for very, very small amounts of money, which in many cases people are either very, very undercapitalized, or the opposite, they don't care about the money because it's such a small part of what they're doing that they tend to trade very recklessly. It can be death by 1,000 paper cuts, and you can sort of bleed to death slowly. The futures markets are not like that, and I prefer that because it's really allowed me. I have over 20,000 hours of screen time, which is something that whatever that book by what was his name, Malcolm Gladwell. It was very controversial about whether you needed anything near 10,000 hours to become an expert or have a certain amount of expertise. So I've learned a lot of ways, definitely from the School of Hard Knocks, lost money like everybody else, but the futures markets, when I found them, they really, really reined me in and honed me in. So there's a major amplification aspect to the futures markets. If you're the type of person that's competitive and wants to be very serious about this game, and again, it's super competitive across all asset classes, and you're competing with very smart people, professionals, algorithms, high-frequency traders. They exist in all sorts of markets. But in the futures markets, it's very, very amplified, and you won't last, every 90% of day traders fail. 18 within 18 months they're out of the game, whatever it might be. You won't last 18 days in the futures markets if you don't approach it with a certain amount of humility and an approach. All right, next reason is it's not stock. So again, I won't get into exactly what a futures contract is. It really doesn't matter. It's a chart. It's a blip on a screen. Represents something. Of course, you have to have a general understanding of the tick and increment value of what you trade, but it's just not stock. So why is it good that it's not stock? Now remember, I like stocks for longer term, for investing. In fact, as I'm making this video, some of my colleagues always hate when I don't make these evergreen because I talk about things in the current time. In fact, I won't. But I have these 3 themes for this year of these stocks that I'm going to own for most of the year, maybe for a couple years, and that's a completely different gig. In that sense, I want to know about the product and the earnings and the management and what their future cash flows are going to be. But for day trading and for short-term trading and for self-directed type of trading for income, I mean, I don't want to have to worry about the management or a tape bomb or manipulation or all the things that can happen with a stock. Can it happen in a commodity in the futures markets? Maybe you hear about the cornering of the silver markets or things like that. But if you're hanging out in the S&P, there's nobody that's going to affect that the way a single person or an event can happen in a stock. So I just like the fact that reason number 4 that I like futures is just the fact that they're not stocks. Next is the fact that let's be real. They actually represent real things. I think most people have heard of trading places, and they always think of commodities when they think of futures, pork bellies and grains and things like that. I don't personally trade those. Those are available in the futures markets, but I just trade stock index futures, things that we all know, Dow Jones Industrials, S&P 500, NASDAQ, as we just discussed. But they all represent something real. The S&P represents a portion of the overall S&P, and of course, lean hogs future or cattle future represents future delivery of those particular commodities, although you're never going to do that when you're a speculator in the marketplace. But this is what you often hear. They can't go to zero. So I'm going to timestamp this a little bit as I'm making this video. We've had, the last 18 months of severe volatility in crude oil, falling from over 100 to at one point almost below 25, although they didn't quite get there. But guess what? It can't go to zero because it's a commodity. It has some value. But guess what? Lumber liquidators can go to zero. All kinds of stocks can go to zero, and you can get attached to them too. It doesn't matter what your trading style is or how much you think that you're not associating the ticker with the actual company. Look. Almost all traders who trade stocks still at some point associate that ticker with the actual company itself, and that can be to your detriment. Again, unless you're really super excited about lean hogs and want to hold on to them forever, the one thing you can know is they're not going to go to zero. So it's nice that represents something real. The next, let me take a little sip of coffee here. I was planning on writing on the slides, but I guess I won't do that. I'm just going to look in the camera and talk here. All right, so number 6, getting short. Again, I think that this audience here is probably a little bit more sophisticated than most, and if you're familiar with what shorting a stock is, betting that the price will decline from the price in which you get in so that you can buy it back later. In stocks and some other instruments, again, I know this doesn't apply to Forex, but certainly in stocks, not everything's shortable. It can be more difficult to short. There's shorting rules. So it's just much easier in the futures markets to go. It's just as easy to go long or short. You get hit on the bid or hit on the offer in either direction, especially in very liquid markets. Very easy to get short. By the way, I love that movie, Get Shorty. I'm sure everyone's seen it. Super. John Travolta. Danny DeVito. All right. Following up on that, liquidity. Right now, the S&P 500 futures contracts trading about 1,300,000 contracts a day. If you come over to the bonds, those are trading nearly 2 million contracts a day on some of the bond contracts. So just extremely liquid. And right now, crude oil, which usually was trading around 300,000 contracts, trading up 500, 600,000 contracts. So just extremely liquid. Going back to the first slide I talked about, which is keeping your life simple, no watch list, no scanners, no having to get used to a new stock every day and figuring out how it acts. One of the other considerations in the stock world when you're looking to, be trading is what is the liquidity? Can I get in? Can I get out? How many shares is this trading? The volume. Those are generally not things you even have to concern yourself with in the futures markets, which makes things nice. I am also, this is for a different presentation, I'm a heavy equity options trader, and when it comes to liquidity and getting short, a lot of the time, the only way to express a short position is in some sort of bearish play, which is normally done with puts. You can do call credit spreads and things like that as well, or take directional bets without actually buying puts. But typically, if you're trying to do that, you're going to construct something that has liquidity issues associated with it. You don't have that in the futures markets. Very easy to go short, very easy to get in and out of positions. The next is, again, going back to that idea of simplification, if you are a stock trader or someone that is looking to be doing shorter term type of trading, very often watch lists and scanners and things are going to look for stuff that's moving. That movement is often measured in something called an average true range, ATR. I've talked about that elsewhere on the channel here before, and you can set your ATR to 5 days, 7 days, a month, whatever it might be. It's the amount of movement that security is actually experiencing on a daily basis. Now, again, earlier in the presentation, we talked about the benefit of a 23-hour market. You can trade at various times. That 23-hour market also gives you a lot more data to work with in terms of what the average true range is because it's over a longer period of time. So by nature, there is more movement in these types of securities, which are futures, which we're talking about here. Now that can change. I mean, right now, in the early part of 2016, we've seen huge range expansion across many asset classes. At some point, they will compress. But for the most part, the stock index futures are trading about 1% or more of their value every single day. That might compress, it might expand, but you have to look and scan and find other instruments that do that if you're not trading these types of instruments. So again, back to simplification, something that moves all the time. I don't have to worry about that. I'm always going to get movement. I put a cheetah in there. Leverage. Now I could do a whole other presentation about leverage because it cuts both ways, but in the futures markets you are able to control quite a bit of access to potential upside and downside with smaller amounts of money. Now some brokers and some folks out there take this leverage to an extreme that I don't think is beneficial for any investors, even professionals or people that have been in futures markets for a long time. But if I had to put a number on it, roughly, about $5,000 is enough to control one contract in the futures markets. Now, you can control a lot more than that at some brokers, but with $5,000 to $10,000, you can get access to very liquid, moving instruments that you can focus on that move consistently, that have a lot of liquidity, and with a $5,000 or $10,000 investment, you'd be very hard pressed to be able to trade many stocks with any kind of size. And here I haven't even got into the day trader margin and thing requirements. In fact, that should have been on here. I don't think it's on here. But with stocks, if you do more than, in the United States, you do more than 3 trades in a 5-day period, you're going to have a pattern day trader assignment to your account, and most brokers are going to require $25,000. Now, I think that's a really, really good thing because I think you should have more money than that if you're going to try to day trade stocks. But $25,000 is the minimum. In the futures markets, all you have to have is enough money to cover your initial and maintenance margin if you hold it through a certain period of time. So there's very, very nice leverage characteristics to the futures markets, which is another reason. Reason number 9 that I dig futures. And then the final thing is I'm not an accountant. I pay my accountant Harvey, who I dig. How you doing, Harvey? Quite a bit of money to do my taxes because I have somewhat of a complex tax structure across a number of different accounts and companies. But I'll tell you that futures markets have some tax advantages to them. I think as of 2015 it was the same, that when you trade a futures contract, 60% of it is treated as short-term income and 40% is treated as long-term income, as longer-term gain. So that's kind of cool, right? And I think that's regardless of your status as a trader, whether you're declaring yourself professional or not. So there's some tax advantages to futures that I don't think are applicable to any of those other asset classes, including Forex, although I could be wrong, but they're certainly not applicable to stock or options. So that's reason number 10. All right, let's go through them again real quick. Reason number one, simplification, no charts, no watch list, no scanners, being really familiar. Reason number two, 24-hour market. So reason number three, they will keep you honest and make sure that you know what you're doing. Number four, it's not a stock. I don't have to worry about getting attached to what I think the iPhone sales are going to be like next quarter. Number five, it represents actual real things and can't go to zero. Number six, it's actually very easy to short. Number seven, it's extremely liquid. Number eight, it moves. When I say it, I mean the futures markets. They move consistently. Number nine, leverage, and number 10, taxes. All right, I don't know, what's the time? Ooh, 20 minutes, man, that just flew by. Let me hit that. All right, this is Rod with VPT Live, reminding you always trade like you mean it. Thanks. This was a presentation, longer form, on the 10 reasons that I dig and like to trade the futures markets. If you'd like to find out anything more about me or VPT Live, and again, I'd appreciate it if you share this in any way that you can on the web, on the interwebs. You can go to VPT Live and hunt around. There's nothing specific that I'm talking about here other than that, the fact that we do trade futures in our trade room, which is a 4-day-a-week trade room, and we have a number of other sister companies and affiliate relationships with people in the futures world. Okay, thanks for listening. I hope this was helpful in terms of giving you a little insight into the futures markets. If you already knew all this, thanks for watching the whole thing anyway. And for all you VPT clients and trading community around the world, thanks for watching as well, and I will see you in the trade room the next time it's open. Have a great night. Thanks.